Hello and morning listeners. Welcome back to Almus Market Mornings, your fresh brew of global financial market updates. Now, ECB was seen moving from dovish to hawkish, hiking interest rates by 75 basis points, as discussed in our previous sessions. And as an outcome, we can see some sort of a retracement in the euro against dollar as a currency. Now, equity markets were also seeing some bit of in a cheerful mood, rallying quite significantly. Probably, if we have to put some feel-good analogy, it was a preempted celebration of Virat Kohli's century in the previous night's match. This actually also reminds me of the times when Sachin's performance used to influence the markets. Any which ways, casual updates aside, JK, we like some sort of updates on the financial markets from your side. Like, what should we be expecting out of the markets today, and hope we don't have to say TGIF at the end of the day?
Good morning. We had two central bankers speak yesterday, the two leading central bankers of the world. One was Powell and Lagarde. For a change, people were not so much glued to Powell because he has already been hawkish. Several Fed members have been sounding hawkish for several days now. And Powell was not going to say something different. So that was very clear. The important thing was ECB rate hike, unprecedented 0.75% hike, promise of more to fight inflation. And ECB President Lagarde, who sounded quite hawkish, as I could see. And, it's not just the 0.75 this month. I think more rate hikes to come. She hints at, minimum of two more meeting hikes and going up to 5%. Then she says we may even go beyond terminal rate and not ready to define the terminal rate. So she says if we have to fight inflation, we may even go beyond terminal rate. That's a phenomenal change from ECB, who had been quite, looking quite unconcerned about the rising inflation till a few months back, and their language has definitely changed. Also important for me was direct reference to the currency, and she said weaker euro definitely adds to inflation, and that also shows how they are also keeping currency in their mind during their policy setting. Of course, she did touch about growth being, growth challenges going forward, particularly considering the energy crisis that the Europe is likely to face. And the inflation also is projected by ECB at a much higher rate. That is something that needs to be accepted. So the market reaction to ECB statements, obviously euro was a bit volatile in and around, went up and came down. But since then, I think market has digested that the ECB has re-established its credibility on fighting inflation, and definitely they're going to go far ahead in fighting the inflation and keeping the rates higher. And as you can see, the yields on the German bonds shot up, 2-year shot up by 20 basis points, and even the 10-year also rose by 12 basis points, and it was in fact pulling up the other yields in US and UK as well. And Powell's hawkish speech obviously adding more to the bullishness in the yields. And so my takeaway from ECB is that they are keen to rein in the inflation. At the same time, they're keeping an eye on the currency rate. And these statements could not have come at the right time for the euro, because already we are seeing very strong verbal intervention from Japan even today. And then Chinese, who have been continuously fixing their daily fixing of yuan rate at much stronger level compared to where the market is trading. And now the market is slowly looking to come near the fixing, and that's really a strong statement from the central bankers as far as their currencies are concerned. A few days back, we also heard about the Bank of Korea selling dollar to arrest the continuous slide in the Korean won value as well. From the Powell statement, apart from its normal hawkishness, the one takeaway for me was touching on the fiscal, and he says that the current fiscal path is unsustainable. Let me touch on where the budget deficit, the fiscal deficit of USA now stands at 16.7% of GDP, and that's the highest among the major countries. Look at even the weakest fiscal country in Europe, Italy, that is 5.6%. Japan, again 8.5%. Probably UK comes closest to US at 15%. So maybe once the current dollar strength is cycle is tops is seen, probably these things come into focus, because US is also running a huge trade deficit in excess of 1 trillion. Sorry, not 1 trillion, about 8 to 9 trillion per annum. So that the twin deficits may come into the fore at some point of time, but of course it's too early to say. Right now, what is playing out is the positive yield differential in favor of the US, which has kept the dollar in demand. Technically speaking, dollar index shows kind of some topping signal, at least on the weekly chart, kind of shooting star, what I have seen. So this can bring down the dollar index once again to 106 or even 105 levels. So definitely currency space has got some relief from the one-way move that we had seen of late. Of course, we will wait and see the inflation report from USA next week. That obviously is not much of a concern for the market, because last few weeks I've seen the oil prices dipping substantially, and now it's comfortably trading below 90 levels. And then, of course, Indian rupee yesterday had the twin advantage, or rather the twin plus point of dollar index trading slightly lower, and then the oil price substantially lower. We did have a good dip to start with, but again, oil companies and other importers have latched on to that dip to go on buying. But I think more importantly, dollar rupee is not likely to keep pace with the dollar index, even if it is on the downside, because we have been very strong against other currencies like euro, GBP, and yen. We should be seeing a correction in these cross INR pairs in the coming days as dollar index corrects. And of course, if we do have large flows, which is not ruled out, because even on the charts, dollar rupee is showing some topping pattern. So if we do see the flows resumption in FIs, in particularly stock market looking so bullish and looking like may touch the previous all-time highs, so rupee can have a modest strength towards 79.20 as well. We also had a news about India increasing the duties on rice exports up to 20%, and certain categories being fully banned from export. So this is to address the local supply concerns, as well as the local prices spiking up. But India is a major supplier of rice to the global markets, and about 40% of the global market supplies is given by India. So definitely the global markets will feel the pinch of this, and if they do continue to import from India even at the higher prices, then I think the government coffers will also have more accretion. So India is trying to balance between reducing its export as well as reining in the domestic inflation. Just to touch upon the Chinese situation, the both PPI and CPI came much lower today than expected, as well as the previous forecast. So I think there is more scope for cutting rates in China as well. So overall stock markets globally are now on a kind of sideways range. I think anticipating the next trigger, maybe the inflation number, and then Fed meeting on February 21st, and possibly how the oil price trends from here on, whether it sustains below 90 or not. Obviously, if it does, it will be a big boost because inflation is then expected to come down substantially. So I'm also ending this update with homage to Queen Elizabeth II, who passed away at the age of 96. It's end of an era, and I mean that's something UK mourns her death today, and definitely a big era ending, and so we pray for her soul to rest in peace. Thank you.
Okay, JK. Indeed, we pray for a peaceful journey ahead. Meanwhile, it was definitely a significant change in stance, as we can see by the ECB president as well as the ECB altogether on being hawkish, hinting more of rate hikes in the coming days and not defining the terminal rates. I mean, there's a good substance in their commentary lately that we are seeing, but at the same time they were seen mentioning the growth concerns on the backdrop of the energy crisis as well as the sticky inflation continuing. But what I still am wondering about, and I think folks you need to also think of, is the fact that USD index, as JK mentioned, is showing topping possibilities. Now this is something that we have to watch for, folks, as we haven't seen any substantial correction in the current round of dollar strength. But even though the dollar index correction is expected and we haven't seen much of coupling or relation between USD and the INR and dollar index in the last few days, we still think there are some more possibilities of USD INR correcting as well. So let's see how things go about on the domestic currency front. And speaking of domestic updates, government was seen in exercising their uh, influence on the rice exports and adding on the import duties. This probably could be an attempt at managing inflations on the local front, but that is something only time will tell. So folks, that is up for today's update, and rather we should say this week's update. We shall come back again tomorrow. No, it's actually we shall come back again on Monday with another round of fresh updates for you. That's it, folks. Thank you so much for listening.
And we also bid farewell to Ganpati today, the last day of the Visarjan. And yes, I think let's all have a celebration, having had him in our houses for the last 12 days.
Definitely 11 days of festive moods comes to an end. So folks, hope everything goes well when it comes to Visarjan. To end, I shall only say Ganpati Bappa Moria.